Welcome everyone. Today we're diving into BlackRock's iShares Ethereum Trust ETF. It's like a straightforward gateway to Ether exposure, giving investors a chance to tap into Ethereum without dealing with the complexities of holding crypto directly.
Yeah, absolutely. It's really an innovative offering in the ETF space. So what makes BlackRock's approach different from buying Ether directly?
Well, the idea behind this ETF is pretty interesting. Instead of going into the crypto exchange world where you have to worry about wallets and keeping track of private keys, the ETF pools funds from investors to actually purchase
Right.
Ether. It simplifies the whole process into an asset you can trade like a stock.
And it's backed by BlackRock's massive credentials, isn't it? I mean, they manage around $10 trillion in assets. That kind of reputation does lend a serious sense of security, even when dealing with a volatile asset like Ethereum.
Exactly. Their iShares series is known for reliability. It gives you easy access to Ethereum, but also keeps you in the comfort zone of traditional financial controls, which is especially important given the inherent market volatility and regulatory hurdles in crypto.
Speaking of volatility and regulation, isn't it kind of ironic that we're seeing more regulatory oversight peak now, like the SEC's approvals in May 2024 for these ETFs? That really paves the way for both institutional and retail investors.
Yep, it really does. Think about it. While Bitcoin ETFs had their moment earlier this year, the move to include Ethereum ETFs marks a maturing of the crypto investment landscape. It's like the regulators are finally saying digital assets are here to stay, but with a cautious stamp of approval.
Right, but while the improved regulatory framework can provide, a safety net, there are still risks to consider, like market shocks or even potential fee issues. What's your take on that aspect?
Well, you're not wrong there. The ETF does come with management fees, and while they're relatively low for a fund backed by BlackRock, they do eat into potential profits over time. Plus, the performance of the ETF is directly linked to ETH's price swings, so it's not entirely insulated from crypto volatility.
Yeah, and the whole custody aspect is another factor. I read that all the Ether is stored with Coinbase Prime, which is a pretty big deal. But don't you think that also means you're indirectly trusting another entity with your assets?
Absolutely, that's a crucial point. Having Coinbase Prime as the custodian simplifies storage, but it also means investors are relying on a third-party security measures. It's like you're outsourcing a critical part of the risk management process.
Right.
But for many, that risk is worth taking for the convenience and regulatory oversight that comes with an ETF.
And that convenience is a big draw. I mean, if you already have a brokerage account, buying ETFs is just as straightforward as buying any other stock. It really opens up crypto investment to those who might be intimidated by direct crypto trading.
Sure. Yeah, exactly. It's super accessible. Also, compared to other crypto ETFs available from the likes of Grayscale, Fidelity, or VanEck, this ETF's low fees and strong liquidity really stand out. Investors seem to appreciate the balance between exposure to Ethereum and the reduced custodial responsibilities.
True, but I wonder if that accessibility could lead to complacency. It almost seems too easy to just hop on and invest without fully considering what a volatile asset actually entails. After all, crypto markets can be pretty unpredictable.
That's a very valid concern. While the ETF lowers the barrier to entry, it's still fundamentally subject to market risks. If Ether experiences a significant downturn, the ETF's value will mirror those losses. So, it's crucial for investors to be aware of their risk tolerance and overall financial goals before diving in.
Yeah, exactly. And another point to consider is the regulatory uncertainty you mentioned earlier. Even though the SEC has approved these ETFs, ongoing debates about the nature of Ether, whether it's a security, currency, or commodity, could bring future regulatory challenges. It's like a ticking clock in the background, isn't it?
Definitely. Regulatory landscapes can shift pretty quickly, and that shaking can cause volatility. It's important to keep an eye on emerging rules, as they can impact everything from pricing to investor protection measures.
And what's also intriguing is how BlackRock's ETF is performing in terms of investments. I mean, it surpassed $1 billion in net inflows pretty fast. That kind of momentum usually signals strong investor confidence. But could that also mean a potential bubble in the making?
It's an interesting observation. While strong net inflows do indicate healthy investor interest, they also can drive up prices and risk overvaluation. It's like when everyone jumps on the bandwagon, sometimes you get a surge that might not last if the fundamentals shift.
Speaking of fundamentals, let's not forget that Ethereum itself is more than just a cryptocurrency. It's a whole ecosystem powering smart contracts and decentralized apps. So, investing through an ETF indirectly taps into that broader potential. What are your thoughts on that angle?
That's a great point. Ethereum isn't just a speculative asset, it's a backbone of the crypto ecosystem with real-world applications. It's like investing in a piece of future technology. The ETF allows investors not only to speculate on Ether's price, but also to tap into its technological significance without the hassle of dealing with the tech side directly.
Right, and when you compare it to other players in the market, like the Grayscale Ethereum Trust or Fidelity's offerings, BlackRock's iteration tends to have that extra edge due to its brand, liquidity, and lower fees. But do you think that this could eventually lead to homogenization across crypto ETFs?
That's an interesting question. While all these ETFs share a common goal of providing Ethereum exposure, the nuances like fee structures, regional accessibility, and even the underlying custody arrangements set them apart. So while there might be some convergence, each product tends to cater to different investor preferences and specific needs.
I get that. It seems like whichever fund investors choose, the key is understanding these small differences, right? Like, if you're based in Europe, 21 shares might be more accessible compared to BlackRock's, or vice versa.
Exactly. Individual preferences and regional factors play a big role. And then there's the packaging of exposure versus the direct hassle of holding crypto. For someone not wanting to manage digital wallets or handle security issues on their own, an ETF provides a neat package.
Yep, sure. But let me play devil's advocate for a moment. Isn't it a bit of a problem that while ETFs ease the investment process, they also shield investors from gaining a genuine understanding of crypto mechanics? You might end up missing out on the underlying technology's nuances.
That's a fair challenge. I think while ETFs do reduce the complexity, they also serve as a starting point for many. Investors can begin with an ETF, and as their interest deepens, they might decide to go further and explore direct holdings. It's like dipping your toes in the water before diving in fully.
Yeah, that makes sense. Starting with the ETF could be an introduction to the crypto arena for many, without the overwhelming barriers. Plus, having a trusted name manage it is comforting for those wary of unregulated exchanges.
Absolutely. The balance between ease of use and exposure is key here, and BlackRock's offering manages to hit that sweet spot for many investors. But remember, while it may be a trusted gateway, investors should always do their due diligence. Keep an eye on fees and be ready for those inevitable market shifts.
Right, because even though it mitigates some risks, nothing in the world of crypto is entirely risk-free. It all comes down to your goals, your risk tolerance, and staying informed about market and regulatory changes.
Exactly. And as this market matures, the ETF landscape will likely evolve too. There may be even more products emerging, each tweaking the balance between direct exposure and investment convenience.
Sure, and with regulators still shaping the rules, it's essential for every investor to ask the tough questions. Do I understand what I'm investing in? Am I comfortable with the inherent volatility? What does the fee structure mean for my long-term returns?
Precisely. It's like assembling a puzzle. Each ETF offers a slightly different piece that fits into your overall financial strategy. The key is to understand that while BlackRock's iShares Ethereum Trust ETF provides a compelling package, it's not a foolproof ticket to profit. There are market ups and downs, and even the best managed funds are subject to economic forces.
I think that's the big takeaway. Accessibility comes with its own set of complexities, and it's never a one-size-fits-all solution. Investors have a lot to consider beyond just the brand name and ease of trade.
Well put. And while the ETF does offer a way to bypass the hindrances of direct cryptocurrency management, it simultaneously demands that you stay sharp about market trends, regulatory shifts, and even technological advancements in the crypto space.
So, in summary, BlackRock's iShares Ethereum Trust ETF is a robust, accessible option for those looking to get into Ethereum investing without diving into the technical labyrinth of crypto custody. But, as with every solid investment, thorough research and a keen understanding of both the benefits and the risks are essential.
Absolutely. It's a well-crafted tool that leverages BlackRock's expertise and Coinbase Prime's custody solutions to deliver an exposure to Ether that's both secure and convenient. But it's still subject to crypto volatility and regulatory unpredictability.
Right. And that, folks, is why you should carefully consider these factors. Whether you're a seasoned investor or new to the crypto game, remember that every investment, no matter how accessible, comes with a learning curve.
Exactly. It's like ensuring you have all the puzzle pieces before putting the picture together. Stay informed, weigh the risks, and decide if this ETF fits your investment puzzle. Thanks for the engaging conversation.
Yeah. My pleasure. It's always exciting to break down these financial innovations and see how traditional finance and crypto are blending together.